you qualify for an FHA loan after bankruptcy? I've been getting this question a lot lately. I've been in mortgage lending for 9 years, and during 2014, 2015, 2016, it was a commonplace thing that people either came to the loan application with a foreclosure or haven't had some sort of bankruptcy. But in the last 3 or 4 years, I hadn't seen it. It was like they just totally vanished off the face of the earth. There was no such thing as foreclosure. There was no such thing as bankruptcy. And so in the last 90 days or so, I'm noticing a huge uptick in questions that I'm getting from people on social media where they're asking me, well, Joy, if I file Chapter 7, what will happen? If I file Chapter 13, what will happen? I'm getting questions like, I've already filed. How quickly can I buy a house after I file for bankruptcy? So let's talk a little bit about what is a Chapter 7? What is a Chapter 13? How do you rebuild your credit and be able to qualify to purchase a home after you've gone through a bankruptcy? Now, even though a bankruptcy will stay on your credit report for up to 10 years, that does not mean that you're going to be penalized for the rest of your life for filing. Once you've had your bankruptcies discharged,
case dismissed,
between 2 to 4 years, you can re-enter the purchase market to be able to get a home loan. Now, if you file for bankruptcy, please understand that that bankruptcy will stay on your credit for up to 10 years. That's a little bit longer than if you have other type of credit blemishes like a repossession or late credit card payment or any type of collections, because it is so severe. You're completely, basically shutting everything down and starting completely back over again. But that doesn't mean that you have to wait for 10 years to be able to purchase a home. With FHA, if you file for Chapter 7 or Chapter 13, you'll be able to re-enter the purchase market a couple of years after that bankruptcy has been discharged. So let's talk a little bit about what is a Chapter 7 bankruptcy. Okay, so a Chapter 7 bankruptcy is probably the most common bankruptcy that there is. Basically, what you'll do is, of course, you will, with the help of an attorney, end up selling most of your eligible assets or all of your assets to be able to pay down or pay off the debt that you have. Now, it's not as simple as going, get an attorney, going to the courthouse, having them rubber stamp your deal, and then you starting your life over again. There are some steps that you have to go through, but ultimately, once your bankruptcy has been discharged, that starts the waiting period for when you'll be able to go forward with the purchase of a home. With the Chapter 7 bankruptcy, you'll be able to move forward with the purchase of your home in about 2 years. But what do you have to do during that 2-year waiting period in order to be able to move forward? Now, I want you to understand you have got to reestablish good credit. And what I am going to do is I'm going to put some links below of some really good credit cards or loans that you could possibly be able to get if your credit is really, really bad and you do have to position yourself to completely restart after bankruptcy. So I do want to at least give you some good sources to use to be able to start your life over again. Don't feel bad. It's just a fresh start in life. But you will have to reestablish good credit. So that means taking out new credit cards, getting new loans, finding new debt, not going crazy, but showing that you could pay it back responsibly month in and month out, over and over and over, up until the point that you are rebuilding your credit score up to a minimum of a 580 FICO score to be eligible to apply for an FHA loan. I'm just going to highlight this, and I'm going to tell you, I've never personally seen this happen before, but technically it can happen. If you file for a Chapter 7, technically after a year, you may potentially be eligible to move forward again with starting that process, but it has to be under some extenuating circumstances, which would trigger you to have to write a letter of explanation about what happened. Did somebody die? Were you chronically ill? Were you in a coma? What was going on? You have to provide extensive documentation to support whatever it is that you put in your letter. I'm gonna be honest, like I said, I've never seen it be successfully done. That doesn't mean that it can't happen, but just understand that 2 years is typically, just to be prepared, gonna be your waiting time. Now, ironically, when it comes to a bankruptcy, you would think, oh, well, I'm filing bankruptcy because I don't have no money. Well, sometimes you can actually need to file bankruptcy and you earn too much money to be able to file for a specific type of bankruptcy, which would be a Chapter 7 bankruptcy. So the alternative to that would be a Chapter 13, where you come up with some sort of repayment plan, consolidate everything, you figure out a way to repay it, there's a trustee over everything, and you're able to move forward. With that type of bankruptcy, your repayment might be 3, 4, or 5 years, and then after you've gone through that repayment process, your debts that you have left over might potentially be discharged, and then at that point, you could go ahead and start to move forward. Now with FHA, that Chapter 13 bankruptcy will typically require that you are on a payment plan for 3, 4, 5 years. Any debts that you have that are not paid off during that time period will ultimately be discharged. But we want to make sure that you are at least making your payments on time for 1 year during that repayment period before FHA feels comfortable with allowing you to move forward. Again, during that 1 year time period, as long as you are making those payments on time and you meet the minimum credit score requirements, you should be able to start to move forward down the pathway to home ownership. Okay, so maybe you've never heard of either one of those, but between the Chapter 7 and the Chapter 13, if you were positioned to have to file bankruptcy, which one do you think was better? Just drop in the comments below. I'm just curious to know what you guys think. Let's talk a little bit about some of the steps that you could take to start to rebuild your credit. Whether you file for bankruptcy or not, I think these credit tips are going to be helpful, even if you do have a lower credit score. Okay, so here are 5 tips that I think that you could use, just some of the things that I've researched that might improve your credit score after you file for bankruptcy. So thing number 1, save your money. Save as much money as you can. Cash is king. You want to have not some of the money, you want to have all of the money. I say this all the time. You can never have too much money when it comes to having bad credit and buying a house, okay? Yes, you will have bad credit because you will have a bankruptcy. A bankruptcy literally means bad credit, okay? Yes, you're not supposed to feel bad or be, I'm not trying to make anybody feel bad or anything like that, but you are in a position where you said, hey, I've gotten in over my head. I needed to wipe the slate clean and start all the way back over again. And so you're still in the process of proving yourself. So what I recommend is you have as much money as possible. That means you need to have more money than you need for the transaction. So you need money for your down payment, which is a minimum of 3.5%. You need to have money for your closing costs. And you need to have money for reserves. Reserves is going to be 2 to 3 mortgage payments left over in your bank account or in some of the asset, 401k, etc., after you have closed on the loan. Again, you can never have too much money with good credit, and you certainly can never have too much money with bad credit. So if you have a bankruptcy or you're thinking about filing for bankruptcy, make sure that you are cash heavy when you're entering the purchase process for a home loan. And just depending on how close you are to when you file that bankruptcy, let's say that you need to wait 2 years and you like right at that 2-year mark, I would almost recommend that you have like 6 months of reserves, because you just, again, you can never have too much money. So you can never have too much money. So if you want to rebuild your credit, which you will have to have several different trade lines whenever you try to apply for a home loan. We do have some non-traditional routes, but when you're dealing with bankruptcy, you want to try to go as straight-laced as you possibly can. So you need to have some different trade lines. So trade lines would be like an automobile payment. A trade line would be like a credit card payment or a student loan payment, which we all know your student loan debts cannot be dismissed in a bankruptcy. So you want to make sure you're paying those and paying those on time, which you should be able to because you have all the money in the world because you've dismissed all of your other debt. I recommend getting a secured credit card. Again, I'll put some things in the description below that may be helpful for you. But effectively, a secured credit card is a credit card where you start out with money that you have put on the credit card to borrow against. So for example, if you get a $500 limit, that's a secured credit card. That means you call a secured credit card company, you give them $500 of your own money, and that is your credit limit. And then after you made your payments for so long, 6 months, 12 months, they may potentially return that money back to you, and now it's no longer a secure credit card, it's become an unsecured credit card. So continue to use it responsibly and build that credit up, and maybe possibly at that point, once it's unsecured, get another unsecured credit card and start to rebuild your life through credit cards that way. But again, do it responsibly. So thing number 3, make sure you're paying everything on time and not like accumulating any late charges, late payments, anything like that. Just do everything on time every single month for months and months and months and months on end, because you do not want to put yourself in a position where you are just barely qualified to be able to apply for the loan. You want to be able to demonstrate, no, yeah, I know I did my 2 years, I did my time, I learned my lesson, I'm doing everything straight from now on. So you have your trade lines and you're making those payments on time every single month, not a day late. Just please keep it on the straight and narrow. Thing number 4, when you have revolving debt, so you've now gone out, you've gotten your secured credit card, your secured credit card has been paid on time for 6 months, 12 months, it's now an unsecured card, you may have gotten another unsecured card. Keep your balances below 30%, please. That is going to improve your chances of being able to show that you're being responsible with any new debts. After you've gone through a bankruptcy, it's showing the underwriter that you are responsible and that you have rebuilt new habits. You are becoming a different type of person, and it makes them feel a lot more comfortable with assessing your risk to be able to approve your loan. So keep those balances as low as you can for as long as you can, all the way up through you being able to apply and ultimately get approved for your home loan. Okay, and then last but not least, I would say make sure you're being responsible with the amount of debts that you're opening up. You only need 3 trade lines. So just keep it simple. You don't have to go out and go crazy getting 5, 6, 7. Like you're not getting any extra points by doing that. It doesn't change anything. We do want to see a diverse type of credit mixture. So, you know, like I said, a credit card, your student loan, a car payment. That's enough. That's more than enough. Okay. So don't go out and, you know, start getting 6, 7, 8 different credit cards, because now it's going to look like, whoa, what's going on here? Are you living on these credit cards? Are you addicted to credit cards? And it just is providing more opportunity for that margin of error. So just be super, super careful. But ultimately, I just want you to know that, yes, you can purchase a home if you have gone through a bankruptcy. Yes, there is a minimal waiting period, but there is life after bankruptcy. And it's a beautiful life because you've gotten rid of all that debt that's been weighing you down for years and years and years and years. You've wiped the slate clean, and it's just a new beginning. And who doesn't want that, right? So if you have questions, comments, concerns, put them below. I'll meet you in the comments. If you all want to share any experiences with yourself, if you filed for bankruptcy, tell us how it went. I'd be curious to know. I follow a lady over on TikTok, and she's an amazing bankruptcy attorney. I listen to her all the time. She makes it sound so sexy. It just makes me think, nah. Y'all have a great day.